Hello, my name is Kevin Peete. I'm a broker here in the Southern California area. And today I'm going to be talking to you about the market report, what's going on in Southern California. I'm going to focus also on the Inland Empire, where I do most of my business. And I do some business in the greater Los Angeles area. We're going to talk about two things today. One is what's going on in the economy. We're going to talk about some of the things that is causing some of the economic downturns. And also, we're going to go into some data that's affecting our real estate here in Southern California. So, yes, let's go ahead and get started. Let me share my screen. Um, so first, we want to go into this is from the California National Association of Realtors, and just want to go back in December 19th, they had a nice write-up about based on the latest economic news, all signs point to a bumpy start of the year in 2023. Despite having improvements in inflation, a slight increase in consumer sentiments, and healthy unemployment numbers, the housing market and the economy overall at the state and national level will face many challenges. The Federal Reserve raised rates again last week, but the recent reprieve on mortgage rates may encourage some buyers to take advantage of the recent shift in the market. And so let's look at the housing demands in California. So sales of existing single family homes dropped to a seasonal adjusted annualized rate of 237,740 in November. So this was the lowest rate since the Great Recession. The statewide median price dipped year over year for the first time in 30 months as less competition relieved upper pressures on prices. Let's look at some of the things that we've been seeing in the news a lot, and one of them was inflation. As you can see, the index tracking consumer prices inch up 0.1% November from the previous month and increased 7.1% from a year. So while the headlines inflation numbers remains well above the Fed's target of 2% for a healthy inflation level, it is the lowest it's been in 12 months. So to give you some background on that, if you've been following the Fed's Chief Jerome Powell, I think back in the second quarter, he came out just when he was beginning to start raising the interest rates. So he said three things that really is going to take place in order for us to really not go into a recession. He said, one, the price stability is important, and then he said that two, the labor market is out of whack. So we need to get that back into perspective. He said three, the American people is going to feel some pain, and the American businesses are going to feel some pain. And so as you are seeing that now, what's going on with inflation, we're at in the 6 or 7%, and we're trying to get down to the target level of 2, which is a comfortable level of a healthy economy. And so those things are taking place now. And we say, well, how do we get there? So the handwriting's been on the wall for a while. If you look back during the COVID years, back 2 years ago, a lot of free money was being given out by the government, and it's like a false impression of a good economy, or a normal economy, because the government was giving you money and the consumers are going out spending it, and it looks like the economy was doing good. So fast forward now, the government's not giving out a lot of money. You don't have these PPP loans, you don't have these stimulus checks, you don't have a lot of things, so people are not spending. And so always remember, when the government gives you something, someone has to pay for it. Always remember that. Someone is going to pay for it. And who is that someone? It's the taxpayers. They're going to pay for it, whether you like it or not. So that's what is happening. So we did have some positive news early in the week or last week. So Chair Powell came out again. Instead of uh, raising the interest rate 75 basis points as he did previous months, he only raised it 50 basis points. So he's pushing the borrow rate to a target range of 4.25% to 4.5%, which was the highest in 15 years. So let's go down and look at the consumer pullback on spending even as prices is moderated. So retail sales for the November, according to the Commerce Department, declined 0.6% ahead of the holidays. As you can see, everything is going up from your basic. As you saw, we had gas going up out here in Southern California. We was almost paying over $7 for a gallon of gas. In some areas, $8 for a gallon of gas. And now that has come down. We're back to a normal level in the $3 and the $3 and $4 range, which is pretty moderate for us out here. So you're seeing consumers are not spending as much because the prices are being jacked up because of the three things that has really been going on with the economy in the past 2 years. That was one, the war in Ukraine, the transportation and the supply chain. We have an issue there, and then we had COVID. So those are some things, that you just cannot foresee, especially with COVID. You couldn't foresee it. So it came, and now we're trying to get the economy back into a normal, stable economy. So let's look at the California unemployment rate. So it did inch up, but remains low. And so as you can see, the unemployment rate is in California last month ticked up to 4.1% as household employment levels declined over 40,000 for the second month in a row. So let's go over here and look at let's share my screen and look at Southern California housing market, and from a county perspective. I'm going to give you some data from the California National Association of Realtor and see how we're doing from year to year. Let me see. Okay, so as you see over here, we're looking at the medium sales price, and we're looking at from November 21st, year 2021 to November 2022. As we look at single family homes, the medium sales price in November 2021 was $782. In October of 2022, it was 801,000. Then currently it's 707,000. So we see a price change month to month from 3%. And also we see year to year 0.6%. But let's go look over in the sales column, and what you see a month to month change of a negative 13.2% and year to year change a negative 47.7%. If we look at the Los Angeles metropolitan area, we see last year the median sales price was $720,000. In October of this year, the median sales price was $742,000. And also we're looking at in November of 2022, $720,000. Again, we are seeing some negative numbers over in the changes month to month and year to year changes. If we look at the Inland Empire, and this is where I live, we see back in this time last year, the median price was $529. October 2022, it went up to about $550. Now, fast forward to November, it's at 540. And overall, Southern California, uh, and back in November 21st, it was 750. October 2022 was 770. Now, again, it's back down to 750. So if we look at these numbers, I look at Bloomberg News every morning, and there was an analyst on there last week. He said the American homeowners have lost over $1 trillion in equity in their homes just in the past quarter, and he said that equates to about $30,000 per homeowners. So if we're looking at these numbers, we're close to that $30,000. We might be you know, 10,000 off, but we're getting to that 30,000. In some areas, it is 30,000. I can show you when we get down and look at the numbers in the actual counties in Southern California. So if we're looking at October of 2022, the median sales price was $854. Now the median sales price is $836. And Orange County is one of our most expensive counties here in Southern California. As you can see, the median sales price in October was 1.165, and in November it's down 1.1 million. Riverside is the county I live in, and as you can see, the median sales price was 599,000, and you can see right now it's 580, almost a $19,000 decrease. And you can also see the sales price, we're down 47.5%. San Bernardino County, just outside of Riverside County, the median sales price back in October was 465, and November is 437, 500. So they are over half their sales year to year have changed from last year. San Diego County, as you can see, they have some positive numbers, which is good. People are still selling out there and getting most of the pricing they're asking for. As you can see, the data is their sales price has gone up from last year. October's 860 and November 865. So I'm curious to see how that will look when the December reports come out. If that's going to be a change, is it's going to still on an upward trend. And we look at Ventura County, just like San Diego County, we're seeing a positive in the medium sales price, and we're also seeing, but we're seeing some negative numbers from sales month to month and sales year to year. So again, this is the market report for the Southern California area. These are our counties: Los Angeles, Orange County, Riverside County, San Bernardino County, San Diego County, Ventura County. Again, I'm Kevin Peete, broker with the Peete Realty Group, broker by eXp Realty. If you have any questions, you could please give me a call. My number is 951-858-5942. And my email is kpsales, SELL, homes@gmail.com. So you can, if you like this video, please hit that subscribe button. And when I put out future videos of what's going on with real estate, you will be notified immediately when a new video come out. Thank you.